Hey, I am here with Monty McCurley, and Monty is our new, what's your title?
Well, I have a title that says I'm the director of Annuities and Securities, but that entails a lot. So I try to handle all of our annuity production in-house. I work with all of our downlines, talking about different cases they may have, getting them illustrations, and then walking through the illustrations with them to help them understand it. And then I just recently, I do have my securities license. I just recently attached with a broker-dealer out of Dallas. So now I can do managed money with my securities license, which is huge because you can't put all of people's money in an annuity. So then we can do some managed money.
That's like day one, right?
Yeah,
you gotta split it up, right?
Yeah, unfortunately, you can't do all $1 million. So.
Right. So why did we, I think I know, but for the folks that are watching, why did we go out at Secure Insurance Group and hire a financial strategist such as yourself? What would be the purpose of that?
Right. I think one thing that Brian discovered over the last few years is we were just leaving so much money on the table. There's 10,000 people turning 65 a day, which corresponds to retirement and 401ks and everything else. So we're just leaving that money laying on the table, whether we're going in and running a life appointment, final expense, Medicare, whatever it may be. So we really wanted to take advantage of that. And then we have obviously our agency's growing. We're getting really big. So we needed somebody to spend some time with the agents and teach them the annuities and the process and how to find that money.
Okay. So you mentioned something there. We are, our agency here in-house is mostly Medicare. I would say we lead with Medicare pretty much all the time. I read something here a while back that says don't waste AEP on Medicare alone. Right? I think there's a lot of agents that are going to go out and they're going to see 100 people, 200 people, maybe even if you're in the Josh Young's category, 1,000, 1,500 people and get in front of them. And there's compliance with Medicare. You can't cross-sell and stuff like that.
Right.
But I don't want our agents just to sell Medicare. I think they're leaving, would you agree, they're leaving a lot of money on the table?
Oh, I agree 100%. And when I was with Secure earlier, that was one of my biggest things I would visit with any agent that would listen to me is, multilining. I come from State Farm, and if you didn't multiline, they would run you out of the company. So
what's multilining for?
Well, we're gonna go in and we're gonna offer them Medicare, the hospital indemnity, final expense. The more policies that we can get within one household, the longer we're going to keep them, the longer we're going to retain them. State Farm had a study that said, if you get somebody with one line of business, they may leave you within a year, which how many times does that happen with Medicare? Okay. But then you go in and put 2 and 3 and 4. If you can get 5 lines of business in one household, those people are going to stay with you 10 years or longer.
Nice.
And the customers we're seeing, that's going to be close to the rest of their lives.
Yeah.
So it's extremely important to me because taking care of your client should be your number one goal. And if you're leaving out the hospital indemnity or their final expense, long-term care, helping them with their safe money, then you're not doing the best job you can for your customer.
Right. And, the reason people get into Medicare is for retention.
Correct.
So the longer we can retain, it's the residual income. That's the gold in Medicare.
Yeah.
Okay, so you're talking to a lot of people, right? Let's say you've got a room full of 100 agents that all they do is Medicare.
Right.
We don't do what we don't go because we don't do what we don't do because we don't know what we don't know, right? So I hope that made somewhat of a sense. You got me. What would you say? Give me 3 questions, because really all they've got to do is find it, bring it to us.
Yes.
We will help them. Give me 3 questions that a person could ask when they're sitting there talking with someone about Medicare.
Right. The number one question I ask at the end of the Medicare appointment, and like you mentioned earlier, there's compliance and things, but the very simple question is, are you happy with your CD money in the banks?
And the answer is no.
The answer is always no, because it's less than 1%. And you're going to, a lot of these houses you're going into may not be the nicest house. The people don't dress nice. You ask a few questions and you realize they got $1 million in CDs. It's happened to me several times just by asking that simple question. That's the number one question I would just, if you can only remember one, start with that. And I promise you're going to get some responses that you like. Another one would be, are you comfortable with your money still having the risk of being in the market? Would you be interested in having a conversation about safe money?
Okay.
Okay.
Nice.
So just those questions like that, and then if you're wanting to get a little more technical, would you like to be earning 3 to 4 times as much interest on your safe money as what you are in the bank with absolutely no risk whatsoever?
Nice. Okay.
So you're talking about CD rates, you're talking about their bank rates, you're talking about safe money, and the products that we offer are guaranteed not to lose money.
Right. Okay. Last question. I'm going to give you an objection because this is the one I hear all the time with safe money or annuities or whatever.
Right.
With my CD, it's liquid, right? I can call Bob down at the bank, tell Bob I'm going to buy this, this, and this. He'll cut me a check out of my CD. With your annuities, it locks my money up.
Right.
What would you say to that?
I'd be very comfortable with that because you do have access to your money that's in the annuities. Okay, CDs. If you get money out during the term, you lose your interest for that entire term. So you're going to depend. Most banks are like that, but with your annuities, you can get up to 10% free withdrawals, penalty-free withdrawals every year. So if you've got $500,000 in there, you could get $50,000 every year penalty-free withdrawals.
Nice.
So it is locked up a little bit more because you are getting number one, a guarantee that you will not lose money in the product, and then you're getting the upside of the market. So they do require you to lock that in anywhere from 5 to 7 to 10 years, but you do have access to a portion of your money.
Nice. Guys, get out there, and as you're in Medicare, as you're talking to your clients, all you got to do is make the introduction to Monty. Right? Just make the introduction. He can help you through it. He can help you uncover some money and really change. I mean, Monty, what's an average annuity?
Average for a beginner is going to probably be somewhere around $100,000 in annuity. Depending on your contract level, that's probably going to be $6,000 or more.
I was about to go write.
Yeah, I'm going to go write a bunch of those, but yeah,
you heard it here, Brian.
If you
he said they could have 60,000.
Yeah, if you can do $1 million in annuities a year, you're going to add $60,000 to your bottom line, and you're also going to retain more of your Medicare clients.
Yeah, that's incredible. Another 60 grand wouldn't hurt. Guys, thank you. I appreciate you watching this, and reach out to us. If you have any questions on annuities, you can reach Monty here at the office.
Yes.
Give us your email here, Monty.
Monty, MONTY .McCurley, MCCURLEY @secureig.com. And you can also reach me at the office. Our number here at the office is 417-883-9300. And just reach out anytime. I'll get back with you just as soon as I can.
Let's go move a little money.